I've covered 4 types of fire in 2 videos last year, but today I'm covering 10 in one video. I've actually seen other videos explain anywhere from 5 to 8 types of fire, so I wanted to up the ante for this one. Call me competitive. Today I'm going to share 10 types of fire that I've come across in research, and number 8 and number 9 were actually new to me. Remember, fire has a lot of accessible elements, no matter how much you earn or your motivation for pursuing it. It's simply about getting better at how you save and invest your money. Everyone can benefit from some of the FIRE principles, as planning for the future, meaningful spending, and saving/investing money are valuable lessons to learn whether you want to retire early or not. Of course, it's a misconception that retiring early means quitting work forever. It's more about having the option to work or not. And you'll see with some of these types of fire that work is still involved with many of them. Either way, financial independence is not a race, as there are many paths to becoming financially independent and financially free, quickly or slowly. So with that, let's dive in, starting with the most commonly known and talked about, which is number 1, traditional fire. Traditional fire starts by knowing your fire number, which is the exact amount of money you need saved and invested to conceivably never run out of money during early retirement. That's because the bulk of your money stays invested in retirement, so it continues to compound and grow. I actually have a whole video on finding your fire number, but basically the formula is to determine your expected annual expenses in retirement, then multiply that number by 25. And you do want to make sure that you're accounting for inflation. So if you project your expenses are going to be $50,000 a year, you need $1.25 million saved and invested. Then each year you'll live off of 4% of your total portfolio if you want to leverage what's called the 4% rule. Ideally, you're going to take out the dividend so that all the rest of your money remains invested. You'll want to do this wisely to avoid paying extra taxes, or any taxes for that matter. You'll also want to avoid any fees for tapping retirement accounts early. But again, traditional fire is achieved at 25 times your expected annual expenses, because at that point, work becomes fully optional. Number 2 is lean fire. So individuals seeking lean fire plan to live off an income of less than $40,000 a year in retirement, and oftentimes considerably less than that. The advantage is the amount of time it takes to get to FI is much shorter than other strategies. So save aggressively now, live off of less later in life as well. Work becomes optional much sooner. Many lean fire seekers prefer a minimalist lifestyle and spend as little as $25,000 a year. So if we take $25,000, multiply it by 25 again, we're talking reaching lean fire at $625,000 saved and invested, which is half as much as traditional fire in that example I gave earlier. The big question becomes, can you live off of just $25,000 to $40,000 a year in retirement? And I'd argue yes if you play your cards right, especially because your expenses can and conceivably should come down later in life. For example, a good majority of people will have paid off their mortgage or will be close to paying off their mortgage come retirement. Healthcare costs, though, could be a different story. Number 3 is fat fire. As you might expect, fat fire allows you to live off of an upper middle class income come retirement. This number will vary depending on location, but a common number is annual spending of $100,000 or more. This means you'd need to have no less than $2.5 million invested based on the 4% rule to achieve fat fire. Now with fat fire, it will likely take you longer to reach financial independence, unless you're an extremely high earner, but it allows you to live off a pretty healthy income come retirement. And some seeking fat fire plan to spend as much as $200,000 in retirement, which is $5 million to achieve. People following this method won't make as many sacrifices in their current spending or in retirement, and so they'll need to save more money to fund their lifestyle than if they followed the lean fire approach, like much more. Number 4 is Obese FIRE, brutal name, but Obese FIRE is planning to retire with $5 to $10 million in the bank, or rather saved and invested. You'll likely need to be a high earner, or you're not starting from scratch. So perhaps some of your wealth was inherited and you're used to an elevated lifestyle. FIRE can absolutely mean wanting more, and you see that with Obese FIRE. Maybe you only retire 5 or 10 years early, but when you do, YOLO is the name of the game. Who says the last 20 or 30 years of your life can't be your best? Now, on the other hand, perhaps somebody seeking Obese FIRE simply wants to create and hand off generational wealth. They want to leave a legacy. They want to help future generations and encourage them to pay it forward as well. Plus, you know what they say, aim for the obese fire stars, land amongst the fat fire moon, or something like that. Stars are made out of fire though, after all. Number 5 is slow fire. Slow financial independence aims to strike a balance between enjoying the process as much as the destination. If you're on the slow fire path, you're not in a rush. You care most about being happy and fiscally responsible at the same time. Balance and happiness is key. It's about living in the moment while creating a simple plan to automate your way to the future. This may be as simple as maxing out your 401k each year, but little else in terms of saving or investing. Those pursuing slow fire aren't in a hurry to get to the retirement finish line, which we've discussed again is 25 times your annual expenses. Instead, they get on the path, do one or maybe two things really right, and otherwise slow down and enjoy life. The goal is still to reach complete financial independence, but there's no specific time frame or target date for the most part. Number 6 is coast fire. And with coast fire, it means spending the next handful of years saving as aggressively as you can, but then you pull your foot off the gas pedal for the rest of your working career while your early investments have a better opportunity to grow and compound. It's saving up enough at a very young age so that you can stop contributing to savings and investments. So with Coast Fire, you save to a target number by a certain age, and then you stop and let compounding gains coast you to your ultimate target retirement nest egg. So you get relatively close to your financial independence number, maybe 80% there, then you could quit your main job and instead take on a part-time job and or build passive income streams to live off of to cover life's basic expenses. So you go hot out of the gate with aggressive saving and investing, then say no thanks to full-time work, and it's on to doing what you want for some income to live off of. Either way, you save half or potentially a lot more than that for a handful of years so that you can jumpstart your investments and take full advantage of compound interest. And you only need to earn enough money to cover your expenses since saving and investing are no longer a factor. Number 7 is Barista FIRE, or Burger Flipper FIRE as some call it. Barista FIRE is having saved enough to retire early but choosing to work part-time for the health insurance benefits. Starbucks is an example of a place you can work with good benefits. So you have enough invested to retire from your main job early, but instead of not working at all, people may use their financial independence to work part-time, do freelance work, or pursue a dream career that is less well paid. It gives you choice of working for pleasure rather than working to live and survive. You're withdrawing money from your portfolio, but then supplementing it with that part-time income, a bit similar to Coast Fire. Instead of the corporate work environment, you can work at the coffee shop, take part in the gig economy, or work somewhere for limited hours a week. This is also an option for those who maybe aren't sure about early retirement and want to test it out a bit. Plus, it lets you explore more of your passions, side hustles, or helps you find something you might love to do for full-time work again. I'd actually recommend this video next for more details about the difference between Coast Fire and Barista FIRE. All right, that's 7. We've got 3 more to go. Number 8 was a new one to me. This is Flamingo FIRE. And I just learned about this one yesterday. The name actually comes from the Money Flamingo blog, which I'll link below. It's definitely worth a look. But Flamingo FIRE is a combination of 3 types of retirement lifestyles. It's semi-retirement, early retirement, and traditional retirement. And there are 3 phases. So first is the accumulation phase, where you're gonna work full time and build up a nest egg, saving and investing as much as possible. When you've reached half of your FIRE number, you enter phase 2, which is semi-retirement. Your nest egg will keep growing while you work, but you only work to cover your basic living expenses. And let's say you earn 7% on those investments, you can use the rule of 72 to know your money is gonna double in roughly 10 years. During those 10 years, you don't have to add to your nest egg at all. As long as it doubles, and of course it's definitely a big if, in 10 years, you're ready to retire. Until then, you can work part-time or work a different job that actually makes you happy, even if it doesn't pay as well as your regular 9 to 5. Once you hit 25 times your living expenses, you've of course reached full FIRE, which is stage 3. Number 9 was another new one to me, and this is Baby FIRE. This one's actually similar to Barista FIRE in that you still need to work part-time to cover some of your expenses, but throw in a literal baby. The aim is to save and invest enough to cover a portion of your expenses during maternity leave so that either one or both of the parents can have a significant amount of time off while the child or children are young. So let's say the mother of the child works part-time and she's able to bring in $12,000 a year, which is a fifth of the couple's $60,000 a year projected expenses. Between her, or probably the partner, they need to earn another $48,000 a year to cover the remaining expenses, ideally before the baby's born. Because hopefully both parents can actually work part-time so that they can spend precious time with their new family. Or perhaps you save and invest as much as you can for a couple of years right after marriage until the baby arrives, however long that is. Perhaps both parents can take a very extended leave from work to spend more time with baby. 10, finally, is hybrid fire, or choose your own adventure fire. And I'm gonna admit, I kind of made this one up, but it does bring up a really important point. There is no singular path to financial independence and early retirement. Even if you pick a path and get after it all in, life can and inevitably will get in the way. Plans get derailed, emergencies happen because life happens. Be prepared to be flexible. The only thing you can surely expect in life is the unexpected. I think they say that the only surprise in a day is a day without surprises. So don't get discouraged if you get off track. Don't hesitate to take a hybrid approach and combine 2 or 3 of the fire paths I've actually covered. Many people have commented on past fire videos of mine that they're taking a hybrid approach of X plus Y and sometimes Z. And if that's you, let me know in the comments. Otherwise, what I really want to know is which fire path spoke to you most? Did you learn anything new? Which are you on or considering? I do read and try to reply to every comment. And I'll leave you with this question to ponder. What's your why of FI? Always remember your why is far more important than the tactical how. If it's simply because you want to quit your job and escape the 9 to 5, you're doing it wrong. Fire should never be about running from something. It should be about running to something. Anyway, I hope this was helpful and a tad bit entertaining and thought-provoking at the same time. If you're new to me and still watching, consider subscribing so we can hang out more often. All of you, please like this video if you like this video. It goes a long way in helping this video find a new audience. This is the Money Resolution. Remember, you can't spell Frankie without fire, and I hope to see you, friend, in a few days on the next one. In the roof, it's on fire. Sometimes I just say the first thing that comes to mind for this outro because I want you to think about watching one of these 2 videos. So I'm just stalling. Definitely that one. See you guys.